Round two of the stream here. Good morning, everyone. A little technical difficulty there. It's Thursday, Jan 30th, and what I was mentioning before was that we had a pretty big day yesterday, and we could see a wave of a new momentum move as we had earnings, or 3 out of the 7 MAG7 earnings yesterday. We also had Fed Chair Jerome Powell and the Fed with a rate decision. So a lot of conversation around those aspects and potential next move in the markets has been brought up, along with Apple earnings that are coming out after the bell today. So first and foremost, Jay Powell and the FOMC. Morning, Marco. The FOMC left rates unchanged yesterday, as expected, ending its streak of 3 straight cuts. The first was a 50 basis point cut. Its statement was largely the same as December's, though it adjusted the language to indicate that the labor market remains fairly solid and inflation also remains somewhat elevated. So during his press conference, Jerome Powell said that the labor market has not been a significant source of inflationary pressure, which led to a little more of that upside press. He indicated that the committee would need to see real progress on inflation or some weakness in the labor market before before considering making adjustments. And the labor market has stayed strong, and inflation stubbornly hangs above its 2% target. So there's not really much for the Fed to do here. The market seemingly comes to terms with the Fed projections from last month, which indicates that they just see 2 rate cuts in 2025 and another 2 in 2026. As for Trump, Powell said that he has no contact since the president said that he would demand that the interest rates be lowered immediately. Just hours after the press conference ended, the president took to Truth Social to slam Jerome Powell and the central bank, saying that they failed to stop the problem they created with inflation and have done a terrible job on banking regulation. This quote sums it up. If the Fed had spent less time on DEI, gender ideology, green energy, and fake climate change, inflation would have never been a problem, Trump wrote, and instead we suffered the worst inflation in the history of our country, with a little frowny face. Clearly, President Trump's battle with the Fed and its independent stance is just beginning. So the FOMC committee and the markets will have yet another uncertain variable to deal with as they navigate the current policy environment. So based on a lot of the information that was said yesterday from Jerome Powell, he said a lot of nothing realistically, but it seems like he was opening the chance for more of a bid in the market. The way I see it, he was kind of holding off on things continuously again. So there's a little more of a bullish sentiment, in my opinion, at how that goes. I think there could be a few more headwinds, like some choppiness, but overall, I expect some of these dips to get bought up for an expansion higher. In terms of MAG7, we had Tesla, Meta, and Microsoft yesterday. Tesla shares dipped, then ripped a little, and they're ripping a little higher right now pre-market after they reported adjusted earnings and revenue that missed estimates. Total revenue rose just 2% year over year, but automotive revenues sank 8% year over year to $19.8 billion, with $692 million coming from regulatory credits. Lower average selling prices across its product lines drove the decline, with its operating margins shrinking from 8.2% last year to 6.2%. However, total deliveries also posted their first annual decline amid high financial costs and increased competition. Tesla didn't provide any specific guidance for 2025, but it expects that the vehicle business to return to growth. Still, the company continues to encourage investors to look beyond the autos and ahead to its future of autonomy and robotics. Overall, though, I didn't like what was going on. Their net income dropped year over year 50%, which is insane. Also, their earnings, about 25% of that came from unrealized gains on Bitcoin. So, I don't know, it seems like a cover-up of a pile of crap, to be honest. Microsoft, on the other hand, moving lower after the bell pretty drastically, is down about or over $20 right now. Earnings per share and revenue topped estimates, but its intelligent cloud segment, which contains Azure Cloud, came in below estimates despite 19% year-over-year growth. The CEO noted that Microsoft's artificial intelligence annualized revenue rate run rate now exceeds $13 billion, contributing to a $2.29 billion in other expenses. Its CFO revealed a projected $1.5 billion loss at OpenAI, where the company has invested nearly $14 billion, and shares are down now pretty aggressive, while retail is looking at this as extremely bullish. So Meta also hit new all-time highs, is gapping up right now. It hit $700 a share. After both revenue and earnings per share topped estimates, Zuckerberg expects 2025 to redefine the company's relationship with governments, and fourth quarter revenues rose 21% year over year, while net income rose 49%. Daily active users rose about 2% Q over Q to 3.35 billion, topping analyst estimates of 3.32 billion. And Meta's AI chatbot topped 700 million monthly active in December, and it expects that number to scale more than 1 billion this year. So as for DeepSeek, Zuckerberg said it validates Meta's commitment to an open source approach AI. There's going to be an open source standard globally for our own advantage. It's important that it's an American standard, he added. So Meta reiterated its $60 to $65 billion market cap forecast for 2025, with its investments in AI infrastructure anticipated to be strategic long-term advantage. But they did not provide an outlook for 2025. And with that, right, Meta is rising higher. One of the things right now is that tech, although a lot of tech is close to all-time highs, a lot of it still lags around the MAG7, NVIDIA getting slammed down after the DeepSeek news, Apple trying to pull back up. But breadth is getting a little overbought right now, and this coincides with the potential of a rally realistically in tech and multiple dips to be bought, in my opinion. We'll see how Apple earnings come out after the bell today, but I like the anticipated potential upside choppiness and a lot of these pullbacks trying to get bought up in these equities the way that I see it. Now, here, pre-market, what we're looking at, honestly, both on NASDAQ and the S&P 500 futures, I am looking to position myself for some opportunities to the upside swing. When I'm looking at the overall auctions right now, the S&P, it's still having some difficulty at that 6105 area where the start of the gap from the DeepSeek news kind of opened up and we pulled off of it. Right now, we're failing to push into that high and making a lower high. So the way that I see it is like, we don't necessarily want to leave this weekly double distribution. I don't really want to see prices under 60.30 for that upside. Most immediately, the best case scenario is we bid 6100, 6110, and we start opening up that upside swing. So I'm going to be looking for the positioning for the long side to come in at 60.70, 60.66 area. And then under that, right, I think there could be a decline to 60.30 before the buyers do pick it up eventually. Now, 60.10 is kind of the final chance for an over-encompassing larger pullback for the buyer to come in and try to push it to all-time highs. But we got to start filling that gap and accepting into an auction higher, which is above 61.20 for that bull side. So I'll leave you with that. I'm looking for some of the long positions today. Not getting super crazy with it because I think there could be a decent little pullback and some choppiness before that buy side comes in. So that's what I got. Remember, check out community.tradeproacademy.com. We're going to open up our live room very shortly. And a question, very random. Growing up in Toronto, did you ever go to a Maple Leafs or Blue Jays game? I went to a Blue Jays game once. That's it. I don't really like those sports, so I don't watch them or go to them. But yeah. Anyways, enjoy the rest of the day, everyone. We'll do it again tomorrow, and we'll stream tomorrow, and let